Hi, I'm Ruby Darr with the Ruby Darr team at RE/MAX Patriots here in York, Pennsylvania. I'm trying to give you a little bit of information as what is going on in our market. Spring's here and the buyers are starting to awaken to the fact that this is an awesome time to buy. With me today I have Steve McLaughlin, and he is with Capitol Mortgage Finiance, and he's been in the business for over 25 years. One of the things Steve has done for the team and for us as realtors is keep us informed. He has actually held classes to educate the realtors in the area on the different mortgage programs, and I just thought it would be very helpful if you heard from him, actually. Steve, just to get a little bit of an idea, the market has obviously changed. Where do you see the market, where it was 6 months ago, and where is it today?
This market is actually one of the most exciting we could have seen in decades. Having been in this business 25 years, I remember when rates were 12.5%. Now, they were higher before I got into this business, but you go back to September, we were at 6.5%. And at that time, we were thinking we were coming down off the possibility of being at 7%. Now we're at 5%. So that presents a tremendous opportunity for people to buy homes that they never could have before at prices they've never seen. This market is one that you do not want to be playing with. These rates are somewhat artificial, and that the government is keeping the market down. So we don't know how long this is going to last. So now's a wonderful time to be buying and take advantage of these low rates and the lower prices that the sellers have passed on because they can't get higher values for their homes right now. That's
interesting. And when you start putting these things to paper and you start looking at what is the actual savings to a buyer, let's just take for an example at the 5% interest rate that you were quoting. If somebody was doing a purchase with a mortgage amount of around $200,000 at 5%, what's their payment?
Well, the easy way to figure these things out is that 5% is going to cost you, every $1,000 that you borrow will cost you $5.37 a month. Now, if you take a $200,000 loan, that equates out to about $1,076. Now, that's just to pay the loan. You have taxes and insurance, and possibly mortgage insurance in there. But if you compare that to a 6%, which calls for $6 per thousand, that's going to be a payment of $1,200. So just that 1% can make a difference of $126 a month. For some people, that means the difference between being able to afford a certain house and not being able to afford the house. So again, you're watching interest rate fluctuations, and you have people who will say, well, I'm going to wait for 4.5%. You might be waiting for 45 years for 4.5%, and in the meantime, maybe the market moves to 5.5%, and you've lost the opportunity to be able to afford the house that you really wanted. It's not a time to be waiting, and the affordability is such as it never has been, because, to take it one step further, that $200,000 loan that you get today, a year ago, because the sale prices of these homes have come down, might have been a $240,000 house. Now we're adding even more on to what the price would, what the payment would have been. So now is definitely a time to buy. If you've ever thought about buying a house and haven't, or you want to move up, now's the time to do it.
That makes total sense to me. I know that the government has put forward a stimulus program to help those first-time home buyers.
Right.
Can you elaborate a little bit on that? Who's qualified and how they go about it?
Yeah, the stimulus has really started in just a short time it's been in. Appears that it's doing the job that they had hoped it had. You get it's an $8,000 tax credit. Now that's a tax credit which puts money directly back into your pocket. You have to be a first-time home buyer, and there's a little catch to that. First-time home buyer generally means you haven't had a house in the past 3 years. So you may have owned a house 5 years ago, and you still may qualify for this. So if you have, you are one of these first-time home buyers and you buy a house, you're going to get $8,000 tax credit. That means if you owe $6,000 at the end of the year, you'll be forgiven that $6,000 and get another $2,000 check in the mail. Likewise, if you, let's say you bought a house and you only owe $2,000, you're going to get $6,000 back. So that's, no matter how you cut it, it's $8,000 in your pocket. Right. So that's a big, big incentive, and it does not have to be, as long as you live there for 3 years, it doesn't have to be repaid. Now, opposed to just rewind 3 or 4 months ago, it was $7,500, and you had to pay it back over 15 years.
Gotcha. I remember that change. That was a great change. It's still a good time to buy, though, if you're not a first-time home buyer, because of the prices, right, being adjusted.
Yeah, definitely. For anybody, now's the time to buy. If you figure out go back and look what the prices were on some of these homes, particularly in newer developments where a lot of the problems have been, and you see the prices on those homes and the mortgages that you were looking at, even at 6.5%, and we were headed for 7% last summer, your affordability is where it never has been before. Plus, you have sellers who are willing to help you out with closing costs. You have prices that are down. And one thing that everybody really needs to concentrate on now is the fact that while it's wonderful we're at these rates right now, the government is doing things that are going to push our rates up in the next 2, 3, 4 years. We're looking at inflation possibilities that we've never seen in this economy because of what they're doing to try to get things squared away. That means that you can very realistically expect to see rates in the 7, 8, 9. There are some people who are saying we will head into the double digits in our rates for not just mortgages but cars and everything else, much like we suffered through back in the early 80s. In 2 or 3 years that could potentially happen. So this is not a time to be saying, well, I'm going to wait 2, 3 years. If you can at all afford to buy a house, now's the time to do it. Best time in 45 years. Maybe the best time we ever see.
Right. I agree with you. I know I've been in the business for 22 years and I've never seen a market like this because first time that you have the adjusted sales prices. Now you've got the great interest rates.
Right.
You've got willing sellers out there and motivated sellers wanting to move up themselves. So, my suggestion to everyone out there that may be sitting on the fence or trying to decide what they want to do, the local lenders and the local realtors know this market better than anyone. I know you're all listening to CNN and NBC and all those publications. However, they're giving you generalizations across the country. And we're totally different. This is a different market.
Well, this is also a very risky market for people who don't do their homework and don't listen to the right people. In the mortgage industry, we've seen across the country the negative effects of what has happened by people, and let's call it what it is, people who have less than honest desires in this market to get in and separate people from as much money as they can. The bad lenders, let's call them, have caused a great deal of the problem that we have. A lot of those bad lenders hang out on the internet. They're on the TV. And if you want to get ripped off getting a mortgage, go ahead and go on the internet and see if you can get a loan. Because the person out of town, whether it's a realtor or whether it's a lender, has no vested interest in you as a client. All they're seeing you as is a number and a paycheck. They don't have to see you in the restaurant. They don't have your kids in the same schools, see your functions. We're local. We have to see our clients every day. And if I don't do right by you and Ruby doesn't do the right thing, we got to pay for that in our reputation. And we can never buy our reputation back. And that's why it's important to deal with local lenders, local realtors, and local people for what you're doing in your home buying experience, because they have that vested interest. The big national companies, the people on the internet, they don't know you and they could care less whether you close. As long as they get their money, and if you show up at closing and there's, in one instance, $10,000 in fees that you were never told about, you're not getting them on the phone, and they're not going to be sitting there to make things right. You're going to write the check as this one person did. They've made their mint, and they could care less about what happens to you and your family.
Exactly. Working by referral is what we do, and we're committed to that in this market. And please give us a call. Steve can be found at what
You
number?
call me on my cell phone, basically one number. Any questions, anything you need, all you need to remember is 717-542-1025, and that's how you get a hold of me.
Right, and to reach me at the Ruby Darr team at RE/MAX Patriots, you need to dial 718-3277, and we'd be more than happy to answer any of your questions, whether you're buying or selling. Thank you, and have a great day.